Let's head over to the CME where Scott Bauer is standing by for us. He's the CEO of Prosper Trading Academy. Scott, good to see you today. Thanks so much for joining us.
You as well.
Curious.
My pleasure.
Thank you. Curious as to your thoughts here. Volumes are really low. What is going on?
Yes. So typically this time of year, we do see lower volumes, right? It's the summer months. We're can't believe I'm saying this. It's only a few weeks away from the July 4th holiday. However, at this point this year, it's a different situation because of all of the headline risk that we have. Is for sure the ongoing tariff talk, next week's Fed announcement, the week after that G20. So we have seen good volatility, robust volume up until this week, really, like you just said. And I think the market's just getting a little tired.
Okay. You know, I'm curious, you know, we always talk about summer and sell in May and go away, but I just wonder here if the market's not being a little bit too complacent. You say that the bulls are walking on eggshells. What do you mean by that?
I really do, because, you know, we're seeing the market kind of tread water today. Market green across the board, though certainly not as high at the end of the day right now as we were during the day. And the bulls out there want to buy into this marketplace. They want to buy any dip that we get here. They want to buy the overall market. However, if you look at volatility in the marketplace, we normally see volatility come in or go down when there's a rally in the market. That's not happening right now. VIX to be sitting at the 16 level for the middle of June is really an outlier. And I think that is because of the risks ahead over the next couple weeks. So the buyers want to step in, but like I said, they're doing it very gingerly. In fact, the guys behind me in the S&P 500 pit here, you know, talking to them earlier, saying the same thing. We're cautious with every upside play that there is.
I'm curious, Scott, when you say that where we're at right now in the market in the summer, that we shouldn't have VIX at 16, I'm curious what historical comparison you're looking at or using to make 16 a number that sounds too high.
Sure. Yeah. Obviously, if you look historically over the full time of data that we have, 16 is on the low end. But if you look over the last 5, 7, 10 years, you're going to see summer months VIX trading down 11, 12, maybe 13. Okay. So the trade had been 11 to maybe 15 as the low to high. Right now, we're seeing that low maybe 14, 15, can't even get there, and then up to about 20 or so. So I have a feeling that we get through next week's Fed announcement, we get through the G20, even if there is no resolution to the tariff issue, we are going to see volatility drop dramatically.
From a trading perspective, what do you like here? What's interesting?
So I think you have to be very choosy here, and I'm not, big on any one sector. However, there are a couple stocks that I have my eye on. On the equity side, Salesforce, CRM, they had a fantastic earnings report when they came out just over a week ago. Stock got hit, though, when they announced that they were taking over, buying another company, Tableau. And I think this is an area around the 150 area that is very interesting for an upside play, especially because volatility happens to be pretty cheap in Salesforce now that earnings are behind us. I also really like Uber. Yes, people are going to look at it and say, oh, it's been trading, it's been public for just a couple weeks now, so speculative. But you know what? For all the negativity out there and for all of the sell volume that came in after the IPO announced, this stock has really hung in there, and there's a lot of volume coming into the marketplace.
Just lastly here, gold, what's it looking like? We're hearing more and more that countries, companies, pension funds are buying gold. What exactly are you seeing?
Yeah, well, the U.S. owns the most amount. Germany is number 2 behind that. Personally, from a technical standpoint, I think the rally up to the 1350 level that we saw, albeit long overdue, I think it happened way too quickly. And if we get any sort of resolution over the next couple weeks between the Fed, the G20, and certainly trade, I think we see a big decline in gold. I would not be surprised at all to see it trading sub 1300 in the next few weeks if there's any sort of resolution, any sort of complacency that comes out any of those risk headlines over the next couple weeks.
Okay. Scott, good to catch up with you. Thank you.
You as well.
That's Scott Bauer, CEO of Prosper Trading Academy.